Well, welcome, real estate fans, to another episode of Seattle's Real Estate Podcast. I'm Dan Edwards, your host. I'm here to provide you with the inside scoop on living, working, and playing in the greater Seattle area, including the Eastside. It is Wednesday, April 17th. We are live on Facebook and YouTube. Feel free to like and subscribe. And if you're listening to us on our podcasts via Apple Podcasts or Spotify, please do us a favor and review and like our show and share it with your friends. We hope you find this information interesting, entertaining, and informative. We've got a great show today. Our first segment, our Real Talk segment, is going to be about 5 top cities on the east side. Now, I said cities. Last week we did neighborhoods. It's because the area that makes up the east side is actually made up of 5 to 7 actually cities versus Seattle, which is huge. And then we've got, neighborhoods. So just get ready for that. But we're also bringing on Tucker. We're going to have dispel 3 myths in the home buying process. And then we are bringing on Kevin Singleton. He's with Elevate USA, and we're going to be talking about his local charity that is getting started here in the greater Seattle area. So let's get ready for our Real Talk segment coming up right now. All right, we are back, and here is our Real Talk segment. Our good friend Tucker is here. Tucker, did you have a good weekend?
I did. Yeah, it was great.
Did you do anything fun?
We took it really easy this weekend. Got some yard work done. The weather kind of was okay. But yeah, it actually took a relaxing weekend.
I really can't even remember what I did.
Yeah, that's a good thing.
Well, let's jump in and talk about these 5 cities on the east side. Being that you are considered an East Sider, your city didn't make the top 5, but don't worry. That we'll talk about some of the other cities around the area in later podcasts. But I want to just kind of go over the differences. Is one thing that stands out here in these top 5 cities is the median home price. Do you see that? Everything is over $1 million, and Issaquah is kind of an anomaly there in the low part of the millions. But one thing that is absolutely certain is the months of inventory. Seattle, when we were looking at the different Seattle neighborhoods, we did see some varying months of inventory, and I also broke it out via condos. But on the east side, I'm tending to just stick to general residential homes, only because Seattle is more known for the density with the condos, whereas the east side is mostly homes, single-family homes, although there's a ton of townhomes as well as condos. But for this analysis, I did that. What stands out to you?
The same. What's interesting to me is Kirkland at 1.3. I just would have assumed that's higher. And then the other question I have for you, Dan, is what's leading to Bellevue having the highest months of inventory, given that it's probably the most desirable place? Is it just the price? It's outpricing the...
I think that's kind of an anomaly, the 1.6, but the geographical space that makes up Bellevue is bigger than the other cities. Kirkland might be a close second, because you'll see I've got a map representation. Is Kirkland doesn't necessarily always cover parts of Finn Hill and stuff like that. But I mean, geographically, population-wise, the largest city is Bellevue. That's why maybe it shows a higher months of inventory, because it's just quote unquote larger city. The other thing that literally jumped out to me is the median home price in Sammamish. 1.8 is the median home price. It's pretty crazy. So you're in the almost $2 million range if you want to buy a house in Sammamish, and and we'll talk a little bit more about how that community is made up. Let's look at Bellevue. So Bellevue, based on population, right? So that's 152,000 people in Bellevue. Median income, and I did median household income. I didn't do median individual income. When you look at these two numbers, they're obviously not always added up, but in the Bellevue case, 140,000 is the median income, which seems kind of low for the house prices in the areas. but again, it's a larger geographic area. So companies, Amazon, Microsoft, PACCAR, Aptio, Expedia, what other companies do you see employing people in Bellevue?
LinkedIn, Salesforce.
Yeah,
You know,
LinkedIn.
almost all your tech companies have some type of location in Bellevue.
Yep. And then entertainment wise, I mean, it's actually a lot of these entertainment are going to be very similar, but Bellevue has a pretty vibrant downtown area. So there's the BAM, Bellevue Arts Museum. There's lots of golf and hiking and biking and parks and water sports because you're on Lake Washington. Some of it fronts Lake Washington, some of it fronts Lake Sammamish. So generally, water sports is kind of a big summer activity on the 3 days of sunshine that we have out here in Seattle. Just kidding.
Today being one of them.
Today being one, yes. I actually, I don't know if you can see my face is a little red. I took my last Zoom call out in the sunshine. So Kirkland, as we move north, and I'm just going to show geographically, the outline, it should actually be bigger because this actually just takes like the city proper, where all of this is considered Kirkland. Same with this up here as it comes up north to Woodinville. But the median income is 135. Google, Inrix is a local company, Gates Ventures, and Facebook are just a few of the companies that employ people in Kirkland. Any others that you can think of?
No, I always think of Costco, but I believe Costco is Issaquah.
Costco is Issaquah, yeah.
Yeah.
So as far as entertaining, things to do, outdoors, water sports, golf, hiking, biking, horseback riding, I should add because it abuts, I didn't put that in here, bridle trails, which is a fairly famous area, where it's like these big estates with horse property in the middle of the east side. That's just south of Kirkland, but it's considered part of Bellevue, part of Redmond, and part of Kirkland. Uh, so then the next city is Redmond with 76,000 as the population. School districts, Lake Washington, median income is 155,000. So this is cool. Microsoft, right? Original OG Microsoft. Hyperlight. So if we're talking about outdoor water sports, I mean, some with the boogie board and wakeboarding, all of that stuff was Hyperlight product.
Yeah. Some consider it like the birthplace of wakeboarding. There's
Yeah,
arguments on that, but Hyperlight was the first major company in the wakeboard space.
yeah, yep. Kayaking, I put that in there because there's a fun little kayaking route. You can rent a kayak and you can go up what's called the Sammamish Slough, and it goes from the northern tip of Lake Sammamish all the way up to it used to be the Red Hook Brewery. Now I think it's just a place. But
Yeah, I think it's sold to a winery.
it's sold to a winery, yeah. So that's up on the northern tip. But essentially, I think you can get all the way. I don't think you can get all the way into Lake Washington. But there is a trail that takes you all the way into Lake Washington and into Seattle. So lots of biking and hiking and good stuff. One thing I'll point out about Redmond is the eastern side of Redmond, this Union Hill. You may be able to see that. Redmond Ridge, Ames Lake. That's all unincorporated Redmond. So it's King County. And some of the prices out there are a little different. They're probably a balance of higher and lower. It's kind of weird because in some cases, if it's a nice newer home, the estate, it'll be higher priced. If it's kind of an old home with maybe a single wide or a small rambler, it might be in that 700,000 to 800,000 in that Redmond area. And then Issaquah. So Issaquah is the smallest in population, only because a lot of Issaquah is also considered unincorporated King County. So it's kind of it's in a location where we call it the Issaquah Alps. So you have Tiger Mountain over here, you've got Squaw Mountain here, and Cougar Mountain all surround Issaquah. And it kind of funnels a lot of the rain like right down into that downtown basin. So I put Simmons, Costco, Lakeside Industries. There's not as many large employers. There's a lot of people that live in Issaquah that commute into Bellevue and to Seattle. And the median income is 143. The interesting thing is this community of Sammamish. Now, this is where I raised my family for 22 years. The size of the population is 65 because it is geographically a little bit more spread out than Issaquah is allowed to be. Recently, this little notch right here got annexed in. It's called Klahani, and that got annexed into Sammamish. So that's creating the even bigger population. But for companies, man, I couldn't find anybody that said our headquarters is in Sammamish. It's an absolute bedroom. It's a suburb bedroom community. Most people that live there work in, Redmond, Bellevue, Issaquah, Seattle, etc. It's more of almost want to say executive style, because if you look at the median income, you've got two people making, six figures in most cases in that area. And that's why you see those home prices being so high. Quite honestly, it's been built out quite a bit over the last 20 years. There's very little left to build. So school districts, I put Lake Washington, I forgot to put Issaquah. So actually Issaquah School District runs right through the middle and the south. So you've got zip codes 98074 up north. That's Lake Washington School District, and 98075 in the south is Issaquah School District. So so there you have it. There you have the top 5 cities on the east side. And in future ones, we'll start breaking out some of the more desirable neighborhoods, and that will kind of open up the areas. I think the East Renton Highlands is one neighborhood that is on the rise. I certainly see home prices coming up in that area, and there's also some land to build in there. So there you have our Real Talk segment. So we're going to take a short commercial break, and when we come back from that break, we're going to dispel a few myths with Tucker's Mortgage Moment. So come back after this short commercial break.
It's about time. Do you find you never have enough time for what matters most to you? Our comprehensive It's About Time virtual productivity program teaches you the secrets of long-term, sustainable, and life-changing productivity. We provide monthly webinars, implementation challenges, resources, community, and accountability. You'll learn tips, techniques, and strategies to help you more effectively and efficiently manage your email, tasks, time, workspace, priorities, projects, and resources. You'll implement organized systems and productive habits that work. You'll finally get better results at work, experience less stress, have more time to dote on your clients, time to spend with your family and friends, take better care of yourself, pursue hobbies, and get more out of life. Do you crave more time for what matters most? Are you ready to take control? Isn't it about time? Well, to start having more time for what matters most to you, call us at 206-579-5743 or visit our website for more information at www.itssimplyplaced.com. Again, that's 206-579-5743 or visit our website, www.itssimplyplaced.com. Join today because really, it's about time. Your time.
All right, Tucker, it's all about the myths that we need to dispel. So we're going to talk about 3 common myths that are keeping people from moving forward in it with an opportunity to lock in the home that they're looking for that will help them grow their wealth. So the first myth today is you need 20% down. Let's talk about that.
Yeah, so definitely a myth, and this is a myth that we dispelled last week on our podcast, but there's a lot of great programs out there that allow buyers to get in with really little out of pocket, FHA at 3.5%, conventional programs with 3% down. And I think the key component with this myth is I think a lot of people expand on the myth that you need 20% because private mortgage insurance is so costly. And I think that's even a bigger myth, that private mortgage insurance really isn't that expensive today. It's risk-based, it's based on your credit profile, and it really makes sense to buy before you have saved up 20% now that mortgage insurance is much
So that's
lower.
really where this came into play. Is a lot of people were talking about the PMI and it's gonna be an extra payment on top of your mortgage principal and interest. You've got PMI, and then you have property and casualty insurance, and it just starts to stack up. So you say it's rate based. What does that look like? What are the general costs on the low end and high end? Is it a percentage?
Yeah, so it's going to be based on the risk profile of the borrower. So a 15% down payment is going to pay less in mortgage insurance than a 5% down because the buyer has more skin in the game with the higher down payment. But looking back at your prior slides about the average price, I think that's the bigger question. Is we have a moving target with a big number on price. How long is it going to take somebody to save 20%? And if the price continues to move up, they may never get there. So I think oftentimes we just need to get in where we can with the down payment that we have available bite the bullet on mortgage insurance and then work to get to that 20% mark to remove the mortgage insurance when we can.
Yeah. So is mortgage insurance, is there an ability to have that be paid in a lump sum rather than a monthly payment?
Absolutely. Yeah. There's a lot of flexibility with it. You can do upfront. So you pay it all at the time of closing. You can do monthly, or you can do split where you combine a little bit upfront with monthly to try to arrive at the monthly payment and the cash to close out of pocket that you're trying to achieve.
Right. So it's kind of thinking that if you maybe if you have some seller credits can help pay some of that, right? So if you have a big chunk of seller credit, you can kind of go, all right, let's use this wisely. So okay, we'll come back to that.
One other thing I'll add there too. Oftentimes people think that the best interest rate is tied to a 20% or greater down payment. And contrary to that myth, interest rates might actually be better at 15% with mortgage insurance than you would receive at 20%. And that is because of that insurance policy. We have a second party that shares in the risk of default, meaning we can potentially offer a little bit better of an interest rate on that risk.
Oh, that's cool. So you're just tweaking it a little bit. Yeah, one of the things I was thinking about is whether you did a monthly or you did the prepaid is, interest rates aren't ideal right now. They're not horrible, but they're not ideal. But let's say 2 years down the road, two things will happen. You may end up 80% loan to value because of the appreciation. And two, that then if you refinance, now you're getting lower rates and that's going to drop off the PMI. So from a cash flow perspective, if you can swing the PMI on a monthly basis, and then in say 18 months or maybe 2 years, interest rates are lower, your things higher. Now you only paid, you didn't have to pay a higher premium. So just kind of strategizing through how to get the most out of your money. I think that's a great way to do. Myth number 2. So your pre-approval rate is the rate you'll get when you close. That's interesting.
Yeah, we get this question a lot, and I think the bigger myth is or question is just when do you lock an interest rate? Like at what point in the process is the interest rate guaranteed? And what I always try to tell people is that it's tied to an address. So we need to have a property identified before we lock in an interest rate, and that isn't always the case. But I would say in 99% of the scenarios, once the buyer has a property under contract, that's at which point they're monitoring rates and they're deciding if they should lock or float. Until you have identified a property and the seller's accepted your offer, you're floating the rate. We're just monitoring it. We're seeing if it's going up or down. We're keeping you in tune with where it is, but we're not actually locking in until you're under contract. There are a few ways around that. We do, as an industry, offer some solutions where you can lock and shop. In a scenario where we anticipate that rates are going to move up and continue to move up, there could be a scenario where it would make sense to do a lock and shop type program, but that's going to typically require an upfront fee. And so as a lender, we have to coach a client on, do we lock that in or do we kind of gamble and wait for rates to come down? And so it depends on the movement of rates and where we anticipate them going.
Okay. All right. So then our last myth is you should wait to buy a home until prices are lower, coming down. Yeah.
Yeah, so I'll leave it to you on home prices. I don't really ever see a scenario where home prices come down. And if they do, I don't really want to know why they did. But when rates come down, I think in our market specifically, we need to be mindful of the inventory that you showed on your prior slides. Is as rates come down, more buyers will enter the market, creating more multiple offer situations and increased prices. And so you may do yourself a disservice by waiting for the perfect rate because the home prices will reflect that it's the right time to buy.
I kind of have a little bit of a theory that one way for things to change is for salaries to increase. And, in our market, number one, we need inventory to increase. But number two, inflation is good for paying off our debt as a country because we can pay it off faster because of inflation. I'm not saying that I want to keep inflation that way, but I also don't want the debt either. But I don't want that handed off to our kids. But one interesting point may be that actually salaries increase exponentially in order to create a change in affordability faster than interest rates coming down. I'm seeing a lot of people now just going ahead and moving forward with their buying decision because they feel like I have to do something anyways, and so we're just getting creative with how to help the cash flow situation. So my advice is if you're in a season of your life where it makes sense to put down roots, maybe it's your first home, or get a bigger house, a smaller home, let's talk. So awesome. Thank you for those myth-defying questions, Tucker. Okay, we're going to take another short break, and then we're going to bring in Kevin Singleton of Elevate USA. It's a local charity looking to launch here in the greater Seattle area. I think you guys will find a great conversation here. So come back after this short, I'm looking for it, commercial break right there.
Are you tired of not knowing where your money is going? Do you feel like you start getting ahead on your finances, then get hit by an unexpected expense and feel behind? Doug Peterson with Get Priorities Straight helps guide you to getting your money to do what you want it to do instead of wondering where it went. Doug has helped ambitious, busy, successful people be delighted by handling their money wisely. To have a conversation with Doug, call 206-264-4424 or email meeting@letsgps.com or info@getprioritiesstraight.com.
Our next guest is Kevin Singleton. Kevin Singleton is a Grammy Award-winning songwriter, cross-cultural musician, and social entrepreneur. With a passion for youth development, Kevin founded Elevate in New York City in 2009. It's a mentoring 501c3 that has raised and invested over $4 million into the New York NYC Community School District 8. Through its innovative approach, Kevin has positively impacted countless lives, boasting in a remarkable social ROI over $95 million, currently serving as the Vice President of Leadership and Development for Elevate USA. Kevin's dedication to empowering communities shines through his various roles, including board member, donor relations at Elevate New York. He also contributes his expertise to Jericho, a haven for creatives, and serves on 2 advisory councils, furthering his commitment to diversity, equity, and inclusion. Kevin Singleton is a true trailblazer in the realms of music, mentorship, social change. Welcome to the show, Kevin. Hey, welcome.
Thank you so much, Dan. It's great to be with you all.
Yeah. So, Kevin, our today's topic is most complain about the education problems at Elevate USA. We solve them. So, why did you found Elevate in New York?
So I was a motivational speaker before I founded Elevate, and I spoke to about 3.5 million kids in 20 countries and 48 United States. And I, sorry about the the fire truck outside. I don't know if
Perfect
you
timing.
can hear that. And I got to a point where I was like, man, I'm tired of going in and getting another standing ovation in another gym or auditorium somewhere in this country or around the world, and then leaving, after I get a paycheck. How can I have generational impact and community impact? And I found this program that had been, the time that I found Elevate, the Elevate model, it had been going about 25 years in Denver. And in that form, it was called Colorado Uplift. There was no Elevate USA, the organization I work for now, when I founded Elevate New York in 2009. That was just a name they had come up with the first replication in Orlando. They called it, the people in Orlando said, hey, how do we do in Orlando what you guys are doing in Denver? They said, we'll tell you how to do it, but you got to come up with your own name. And that name was Elevate Orlando.
All right. So then how did you decide what school to start at?
Well, it was about relationships. So basically everything we do with our organization is relational. There's a relationship with the school. There's a relationship with the students. There's a relationship with the parents. There's a relationship with different partners in the city. We partnered with an organization called Instanet. It's a Nomura company, Japanese bank, and it's $1 billion part of that house. And so we would take kids from, poorest congressional district in America down and fob into $1 billion boardroom. So everything is based on relationships. And I simply had a relationship with a math teacher at a school in the Bronx, and it happened to be the poorest congressional district in America. So I'd like to say that I've done a lot of planning, but I just had a relationship.
Yeah, that's the truth. Is how we met, came from a relationship, just a connection, right? Okay,
that's exactly right.
So let's before I jump in, kind of describe how Elevate in New York currently works today.
Sure. So we've partnered the high school where we are, we've partnered with that school for now 12 years. And we have 2 teachers that are in a classroom, and they teach 180 days a year. A lot of people go, now, is this an after-school program? Well, yes, it's in school and after school. And so the school district signs off on our award-winning curriculum. We've got over 1,000 lesson plans, at least 140 lesson plans per grade from grade 6 through 12. And so because of that curriculum that has been so successful over now 42 years, schools will let us in to teach the kind of things that someone taught you and I. You know, things like leadership, vision casting, communication, positive work ethic, caring, courage, decision making, integrity. We teach that as the subject matter, as an elective class. So kids they're choosing their schedule for next year, and they go, okay, I'm going to take English, history, underwater basket weaving, and a leadership class. And that leadership class is Elevate. So our teachers, they teach that class every day to high school students, and then they teach the high school students to teach what they've learned to 3rd through 6th graders, because we believe our highest form of learning is teaching. Then those same teachers, we call them teacher mentors, they hang out with kids after school in what I call boardrooms, ball games, diners, and coffee shops. That's where they continue the conversation they began in the classroom. Then those same teachers hang out with kids out in nature. That's where they apply what they've learned in the classroom, whether it's falling out of a whitewater raft or falling down a mountain. We want to put kids in a situation where they'll fail, because we know that if they can fail, that they can truly begin to learn and apply what we taught them in the classroom.
Kevin, that's not right. We're supposed to protect our kids from failure, right?
No, we want to make them fail. Everybody knows that. Let me not get in trouble before we even start one here.
No, I love that. I think it's great, because honestly, you know, I mean, I've been a failure all my life. It's the best recipe for success. You know, the worst possible thing about failure is not learning from it, right? Yes, not learning from
exactly
it.
Right.
That's so good. All right. So essentially this I guess it's almost like a virtuous cycle, right? To where a teacher is pouring into a student who pours into another student, et cetera.
That's
exactly
virtuous
right.
Cycle. Exactly right.
So talk to me about the efforts in Seattle, because that's what we're here about Seattle.
Sure. So I'm a part of you said it in the intro, I'm part of the National Business Development Team for Elevate USA. When I started in New York, I was a 3rd city in America. Now we're in 21 markets. Navajo Indian Reservation is one. We just launched Augusta, which is very exciting, because Gary Player, I think he's the winningest golfer in history. He hadn't won the most majors, but I think he's won more tournaments than anyone else. The Gary Player Foundation is a part of what we're doing, and Elevate Augusta, his daughter Amanda Player is on the board. And so when we were looking at the country and going, where do we go next? I raised my hand and said, hey guys, I'm moving to Seattle. I'm working on a music project there as well. Hey, let's do it, man. So I've been spending the last year and a half or so building relationships with leaders so that we can launch an affiliate in the Puget Sound in Seattle. I don't know what we're going to call it, because the way we do it nationally is we provide the framework and the training, and we allow the local people to own the project. And so we're looking for 2 to 4 what we call champions, and those are people who, as in my title says, they actually want to do something about the educational problem in America. A lot of people talk about it, and what we do is we don't spend a lot of time talking about it, Elevate. We just go at the grassroots levels and begin to help kids, because kids, they're the same as they were. People say kids have changed. Well, somewhat, but in a sense, they're the same as when we were. We just want to know that somebody cares about us. Harvard calls it the caring adult model. And so we hire people that become those caring adults in these kids' lives. You know, people that will do things like my mom did, or my uncles did, or, you know, those people who are helping me. So where we are in the life cycle, I'll call it, of Seattle, is we're looking for our champions who will build a board. Then that board will hire an executive director. That executive director will hire the staff, and then we'll choose the schools. So we're not even ready to look at schools right now, although I do have some hints of where we might begin.
Awesome. That's great. So essentially, the next phase would be assembling this board. That sounds like that's where you're at, right? So
That's correct.
how do people get contacted? Um, how do they get involved? Like, take a next step. Is it a connection with you?
Yeah, it's a connection with me, and my number's right there. You can also go to the elevatetheusa.org. We don't have a website yet in Seattle, but elevatetheusa.org, and you can reach out to them. You can also reach out to me. I'll give you my email address. It's ksingleton@elevatetheusa.org.
Okay.
And so those are the ways that you can reach out.
Okay. So we had a bunch of things to talk about, but I think based on exactly what you're trying to accomplish, I want to kind of stay in there. Can you share with me some of the success stories from your Elevate in New York?
Oh, absolutely. I'll call him Paul. I won't give you his last name, but Paul was in our first year, and Paul came into the classroom, and he's one of those kids that everything the teacher says, he's got to say the opposite, even if he doesn't know what he's talking about. Mm-hmm. Well, that kid became almost like a son to me. I remember when his mom passed away, I think I might have been the only person in the room who didn't speak Spanish. And the young lady who is now our teacher, she works for our organization. It's another story. It's pretty fascinating. She was interpreting this 3 hour. I don't know if you've ever been to a Spanish wedding in the Bronx. It's about 3 hours. And
it's very specific. So no, I haven't.
Very, very. Neither had I, my friend. So Paul, when he graduated from high school, went to college, and he kept dropping out and going back in. I'm going, Paul, what's the deal? Well, his mom had been battling cancer, and every time he would start school, she would come out of remission, and he would have to go and help. They had a couple of daycares that their family had, still living in poverty. I mean, every kid in our school, it was a Title I school, so that meant that every kid had free and reduced lunch. There was no cash register in our cafeteria, and that's how they determine whether or not a kid is eligible for free and reduced lunch based on the parents' income. So, they had a daycare center, but it's not like a daycare center in Issaquah, my friend. Believe me, I walked in it one time. And so Paul would leave school. He'd go back he'd go help his family. He re-enrolled. He went through the cycle 3 or 4 times. Today, Paul is a pre-med student with over a 3.5 average. And I'm just going to start calling him Dr. Paul now. Dr.
Paul?
Yeah, because this kid is just the resilience. It's just pretty amazing. And he's Paul the fourth. I almost said his last name. And the previous 3 were either in jail or involved with drugs and gangs. And so it's pretty amazing to see this kid's transformation. Yeah.
That's awesome. Well, I'm glad we connected. I'm glad we were able to meet. I'm glad I'm able to put a spotlight on this. I hope, I'm going to cut this video so you can share this with others so people get a better idea of, what it is you're doing here and planning on building in the community. Thank you so much for coming on the show. I appreciate it.
You're welcome, and thank you so much. And I learned a lot about real estate, man, in that first segment. I'm going to become a fan, man.
Oh, thank you. Appreciate it. I do. Tucker and I try to keep it real. I'll bring him back on there as we conclude. Hey, Tucker, anything you wanted to ask Kevin?
No, I just think what you're doing is outstanding, and I think we need it in our area. I think a lot of people don't necessarily think of the Seattle area or the Eastside as a place that needs that type of service, but we are. It happens right here, and so thank you for what you're doing.
You're quite welcome. Thank you for what you all doing as well.
All right, cool. Alrighty, I just thank you everybody for coming out. I appreciate it. If you have a business or charity that you want to spotlight in Seattle or on the East Side, I'd love to have you. I hope you enjoyed the show. And now I'm just kind of stalling because I'm trying to find the outro because we've got this cool little outro video. Thanks for watching. We'll see you next week.